April 10th, 2024. Um, pretty good example of a parabolic wedge on the open. You can see here. I have a couple examples of parabolic wedges. I think they're pretty cool. Um, I don't get to make too many of parabolic wedge examples, especially ones that are this good. So I actually really thought that was interesting today because they're just not usually this clear and this clean. Um, So on the open of the day, when you get a big gap down like this, I think your first thought should be looking for magnets. And what is the first magnet always going to be when you get a gap down below the prior day's low? The prior day's low is always going to be the first magnet. So you have to be thinking a lot about the prior day's low. And if we don't get there, that counts as one open gap. And we could potentially get, if we failed to close this gap and started to trend down, it could potentially be a small pullback bear trend day. I also thought this would be a gap this low. There are usually buyers at a buy climax low, and you can see there were probably going to be buyers at this low since it was a buy climax. And so you would imagine we would probably get back to that low as well, which we did. So coming into the day, I thought we would probably touch this low and this low. Why will we probably touch them? Because it's a trading range day. 80% of days are going to open as trading range opens. So you have to be expecting that you're going to get a trading range open and that we're going to try and close gaps and close magnets essentially. Additionally, if you look at the daily chart, the context really wasn't all that good for some sort of big sell-off. We were gapping down pretty much right into support and probably the bottom of this trading range. So it really wasn't all that good of context for a sell-off. And I don't think, the context, this is essentially, inside, and is this the breakout you wanted? And is this the follow through you wanted? Not really. So I would expect that somewhere down here, bears are going to start to cover shorts and we're going to get some sort of bounce. Maybe tomorrow, maybe Friday or something, but I would imagine that by the end of the week, we're probably going to get some sort of bounce. Maybe early next week, but I personally think it'll be by the end of this week, we'll get some sort of rally. I think we were trying to get it in here. When you were getting these big bull bars and these, the odds were favoring some sort of rally at the end of the day, and we started to get it, but you can see it just ended up failing. I thought this would end up being a magnet since it was a reasonable buy the close bar. It wasn't a great buy the close bar, but 14 consecutive big bull bars is a reasonable buy the close bar. So I thought that would be a magnet, and it probably still is. But you can see, big buy the close bar. We trade back down, all the way back down towards the bottom of the buy climax, but we end up testing back to that area. Bull bar or bear bar one, essentially accepting the gap. It's, if you think this is a big bear bar, it's essentially follow through for the bears, but it's really not all that great. I wonder if we pulled back to about 50% from yesterday's close. Not quite, but close. But anyways, probably sellers above, probably buyers not too far below. But again, expect a trading range open. Bad follow through on bar two, tail on both sides, doji bar. Bulls, what do they want? They want good, strong consecutive bull bars, or they want some sort of weak sell off to look like a leg in a trading range and then a reversal up. Bears, they see this, this high one for the bulls on bar one as a bad buy, and they want to get some sort of air bar closing near its low. Bar three is a good bull bar closing near its high, but two is a trading range bar, and so you're essentially buying high in a trading range if you're buying above three. It's probably a developing trading range, so really not very good to buy the close or buy above. And if you do that, you need to be, willing to scale, buy really small and scale in a lot lower. You know that there's a magnet right above in yesterday's low, but the trader's equation for getting there is not all that good. I thought there would probably be buyers below three, but maybe not directly below three. One of the reasons for that is that if we trade down to here, which is below three, this is already a pretty big bear surprise. So it might get a little larger. So I thought more likely some traders might wait to buy below of one, but there's nothing wrong with really buying below three if you're willing to probably scale in down here. But some traders will just take the scale in, buy below one. And then we get a huge rally up on bar five. Bears see a gap down and a low one bar three and a low two bar six. But, I don't really want to sell the low two on bar six. We're pretty much in the middle of a trading range, and it's, more or less a doji bar, so it's not that good. So do bulls want to buy directly above five? And by the way, on bar six, we do close the gap with this low, so that's one of the reasons there were sellers there. Do bulls want to buy directly above bar five? Probably not. Why? Because it's a big bar and there's big risk. So where do they look to buy? Probably around the 50% correction. You can see that's roughly where seven went to. And traders started to buy it on bar seven. Bar seven, it's a bear bar closing, kind of near its low. It's kind of a difficult bar. If you were short or if you were long for any reason, you probably get out below seven, but it's a bit difficult. And, to prevent themselves from having to make a decision, bulls buy the close of the bar, trying not to let it trigger. And you can see we trade up above the bar eight. Sellers above, hard to want to buy above a bar like eight. You're buying the top of the channel. You can see we have a developing channel here. Bar 9, a bear bar, but a big tail on the bottom. I don't want to sell. It's, you could argue it's 3 pushes up, but I think this channel is relatively tight and it's not a very good bear close. Even if it was, I would want to see follow through. I need to see a good bear bar with strong follow through, and I'd rather get to the moving average first before selling. So, not a great sell below 9. Big outside up 10, but bar gets too big to buy. I would rather not buy it. And 11, an inside bar. Again, a lot of the same problems. I don't want to sell below 11. I think, we're getting high in what's probably going to end up being a trading range. And this is a channel. So usually when you get a breakout attempt above a channel, the breakout attempt is going to fail. So it's hard to want to buy up here, even when we start to do this. And you'd rather get, really strong, good bull bars closing on their highs instead of these big tails. 12, it's essentially a parabolic wedge. 60% chance, 2 legs sideways to down, but probably a minor reversal. Bulls will probably exit below, but it doesn't trigger, and you get a big bull bar 13. Bull follow through on 14, but a big tail on the top. You can see tail on top of 13, so essentially a 2-legged breakout. Rally 13, you can see essentially this, and then you get a pullback, so pullback 13, and then rally 14, so 2 legs essentially. And that's an important concept because the same thing happened here, right? We got 1, pullback 2, pullback 3. So 3 pushes down. And when you get 3 pushes down, what does it usually lead to? 60% chance of 2 legs sideways to up when you get 3 pushes down. And 23 rallied and then pulled back, and then 24 rallied. So this is a 2-legged correction on a smaller time frame. And where is it correcting to? It's correcting to the moving average and to the top of the channel. So 15, 16, 17, spike, pullback channel. So the top of the channel, essentially the 18 high or the 17 high. And that's where the market often tests in trading ranges. It tests the tops of channels. So not really a good buy at all on 24, not really a buy the close bar, a bit more of a sell the close bar. But anyways, 15 parabolic wedge at the moving average, probably a more minor reversal, but it's the open. So you can be a bit more aggressive and take a chance hoping that it's the high of the day. Definitely going to be a good sell below 15, probably the best trade of the day. One of the better trades of the day. I thought 45 was a really good trade too, but still definitely a really good trade on 15. They're both swing trades. 16, big tail on the bottom, but still okay to be short. You don't really have to get out anywhere. But again, probably a minor reversal, so a bit difficult. Big follow through for the Bears on 17. Not the strongest or really strong bar, but look how strong the channel up was from 1 to 14. It's really strong and relatively tight, so it's hard to think that we're just going to race straight down here. So a lot of traders might end up scalping with 10 points, and I think that's what a lot of what 18 is caused by traders just deciding to get out with about 10 points. 19, a bear bar closing near its low. It triggers the low one below 18. Bears would have exited above 18 had it triggered, but didn't. So probably okay to sell below 19. Disappointing follow through on 20. 19 always in short, low one. It's a low probability trade, but probably, I think always in short, bear bar closing near its low. Might be a trading range, but okay to take looking to get to the probably the low of the 18 bar range. You can see we haven't broken out of the 18 bar range yet, and we're probably going to. 21, a bear bar, but a big tail on the bottom, relatively disappointing. Follow through for the Bears on 22 is okay, but they would like to get more follow through here. And then 23, disappointment. I think Bears just get out above 23. We've had 3 pushes down, and there's too much risk that we could get a reasonably decent test up, like what happened on 24. So I would rather just get out. And you get a big bull bar 24 closing near its high, but like I said, probably a second leg trap near the top of the channel, near the moving average. So not really a great buy above 24, more of a self-closed bar. Outside down 25. Bears, you can be looking for another sell, but 24 low one, not the best entry bar 25, so better to be flat. 26, a bear bar closing near its low. It's okay to be short. You can sell 26 if you want to, but as always but you're low in a trading range, and this is not really an overly convincing bear trend. Can you look at the move down from 15 to 25 or 26, I suppose, at this point, and tell me it's definitively a lot stronger than the move up from bar 1 to bar 14? Not really. It might be a little bit stronger because 15 through 17 is pretty strong, but 23, 24 is a problem, and then we had decently strong bull closes. So to me, this whole move down looks like a leg in a trading range, the same way the rally looked like a leg in a trading range. So it's probably a trading range where you should look to buy low and sell high, rather than be selling bear bars towards the bottom. So I don't really think it's all that great to be short down here. Additionally, the 24 close, I'm going to contradict what I said a minute ago because it is more of a sell the close bar. But anytime you get a big bull bar closing near its high, it's a theoretical buy the close bar. It's not, I wouldn't do it, but because if you're buying the close of 24, you need to have an ultra wide stop and be willing to scale in. But the point of me saying that is any buy, quote unquote, buy the close bar, 24, 14, 47, they become magnets. So it's not a good buy, but it's a magnet is the point I'm trying to get across. And you can see that's what we were testing over here. Excuse me. And if you had bought this close scaled in lower, what are you going to do? You're going to sell out when we get there. And that's what caused all the selling on 43. So again, it's not a good buy the close bar, and it's not really buy the close, but it's just any big bull bar is going to be a magnet the same way any big bear bar is going to be a magnet. Because there are algorithms that will trade any strong close pretty much. So 26 follow through, 27 follow through for the bears. But again, to me, I see a leg in a trading range. I do not see this as the start of a bear trend. It probably needs to get stronger if it's going to be the start of a bear trend. Inside bar 28, inside bar 29. So a possible final flag for the bears. Really not all that great. If I'm a bear, I'm probably getting out above 29. And essentially a low one short for the bears. But we end up finding buyers below because it's not a very good short because it's a bull bar. So 30, a doji bar, probably sellers above. It's fail breakup below the II. And then you get a big bull bar 31. I wouldn't buy above 31. I think at this point you're buying too high. 27 through 30 is essentially a tight trading range. So if you're buying 31, you're kind of buying higher in the tight trading range. And in a trading range in general, you want to buy as low as possible and sell as high as possible. And so for me, I think 31 is a little bit too close to the middle. 32, a doji bar, potentially a low too short, but really not all that good. I'd rather wait. You get follow through on 33, but I don't really think this is all that ideal. I'd rather be flat. This is looking like more of the buy zone than the sell zone. 34, an inside bar and a big outside up bar, or almost outside up 35. I think an okay swing buy on 35. It's a wedge. Maybe 21, 27, 33, maybe 18, 27, whatever you want to call it. It's some sort of wedge and a potential, I would argue potential major trend reversal. And if you're going to take it, though, we might have to go a little more sideways first because the bars were relatively strong. And there's probably sellers at the 24 close when we get there. Now, did I think there was going to be sellers like there was on 43? No, I thought it would be more of a pullback. And you could see how it looks and judge if you want to stay in the trade. But in trading ranges, the pullbacks are often a lot deeper than you want them to be. And that's why things like 43 happen. So 37, I thought reasonable to take a chance, swing by, stop below the low of the day. Or sorry, 35, follow through 36, but big tail on the top, not as good as it could be. Buyers below 37. 37, doji bar, bad follow through 38, big tail. 39, bear bar closing near its low. It's a big low too, so 32 is the low one, 39 or 38 would be the low two, and 39 would be the follow through bar. And it's at the moving average, but I'm not all that convinced. I would probably rather see follow through on 40. It's maybe not the worst sell in the world. It's probably an okay swing, but low in a trading range, so tough. Outside up, 40. So bull bar closing near its high. It's probably stayed always in long, and bears are going to exit above 35, might not be back in. And 35 was a reasonable bull bar, a reasonable swing buy. And after a swing buy, the market often tries to trap traders out like it does on 39. So 40, maybe an okay buy. Fall through 41, I think definitely buy the close 41. 42, good bull bar. And you can see 43, we tested the 24 close and we got just a massive sell-off. I was not expecting the sell-off to be that big. Again, I thought we might see some sort of pullback. I expected to see some sort of pullback, but this was rather unusual. Big outside down bar, 43, and it kind of changed the character of the day. The bars for the rest of the day became a lot bigger, a lot more dramatic for the most part. 44, follow through for the bears, but towards the bottom of the trading range. It's probably sell to close, but I'd rather sell below the bar, and you're looking for a big breakout. My main problem here is that I'm just not that bearish. My context overall on the daily chart is really not all that bearish. So 44, probably not as good of a sell. It's okay, but I just, I was not expecting a big move down on the daily chart. So I wanted more proof from the bears than 44. 44 is also a shrinking body from 43, so it's not as good as it could be. 45, a reversal up. It's a big wedge with yesterday. You can see 1, 2, 3, maybe sort of nested wedge, 1, 2, 3, or 1, 2, 3, whatever you want to say. And sell climax 44, 43, 44. So failed breakout below the 18 bar range, sell climax, big wedge. And, we're probably getting back to at least the 42 low since it was reasonable to buy below. So I think 45, pretty strong buy. Really pretty much ideal follow through on 46, and then a huge bull bar 47. Do you buy 46? I think 46, reasonable buy. 45, reasonable buy. What about 47? I think really tough. It's really big. It's much bigger than it should be. And 48 did something interesting. So for about the first 3.5 minutes of bar 48, it was just kind of sitting there right around its open, seeing if we were going to continue to rally or sell off, because this was a big bar and a relatively climactic bar, which means it's a trading range bar. So for the first couple minutes of the bar, we were kind of just sitting around this area, bouncing a little bit up, a little bit down, a little bit up, a little bit down. And why? Because traders knew that this was a climactic bar and the risk of a sell-off was real. However, we were still on bar 47. There's still a lot of day left, and the context for a rally wasn't bad. So it was reasonably possible that we just started a bull trend right here. But this was a little bit bigger than traders wanted to be and a bit more climactic. So for the first 3 minutes, traders were essentially deciding, is this maybe going to be a bull trend, or are we going to start to rally, or is this going to be a sell-off and it's going to be a trading range? And you can see the bar pretty much did this in the last 70, 80 seconds of the bar, because traders gave up, bulls gave up, and they said, okay, looks like it's going to be a trading range bar. And they all started to sell out, and that's what caused 48. 48, a bear bar closing near its low. Do you want to sell below 48? I would probably not. I think it's mostly bulls getting out. And after 45 through 47, I probably wouldn't. To me, 40 after 43, 44, I thought 45, 46, 47 had a chance to do something. But to me, now this just looks like a big trading range. So I'm getting rather resistant to taking trades. Follow through 48, 49, but big tail on both sides. Follow through 50, but three big bull bars, 45, 46, 47. Three big bear bars, 48, 49, 50. What happened after the three big bull bars? We got a reversal. What do you think is going to happen after the three big bear bars, right down to the bottom of the buy climax, where there's probably going to be buyers? Again, in trading range especially, there's always buyers at the bottoms of spikes. So I would imagine there's probably going to be buyers down here. And you can see even the 44 close is going to be a magnet, since traders who sold the 44 close scaled in higher. They should be able to get out. 51, a disappointing doji bar for those bears, and a lot of them exit costing 52. If you buy above 52, I think you probably can. It's a double bottom 45, high or low. You could argue big breakout pullback, but I thought that the 47 close was going to be a problem. And you can see follow through 53, but a tail on the top, tail on the bottom, but a doji bar, still technically follow through. 54, a big tail on the top. Why? Because we touched the 47 close. If you bought the close of 47, you did not like to see 48 for 950. They scale in lower. They're using 54, the rally on 54 to get out. 55, an inside bull bar, but a tail on the top. I think it's hard to buy up here. We need some sort of good bull bar and something convincing. 56, an inside bar, a high one. So 55 was an inside bar. So 56 is an II pattern. It's a triangle. I would wait to see the breakout. Not really an ideal breakout 57. You want to see it closing above the high of 55 and 56. And it wasn't quite able to. So I'd rather sit out, see if 58 is good follow through. And we get a failed breakout above, outside down, 58, follow through 59. But really not ideal. 59 overlaps 58 a bunch. And, I think this is just a trading range. It's becoming a triangle. You can see 48, 54, 58, and 45, 51, 59. And so it's clearly becoming a triangle here. I would be careful about taking any trades towards the apex of a triangle. 60, a low one short, but not very good. Probably buyers below. And you can see there was on 61. 62, a good bull bar, and it's at the apex of the triangle. So potential swing buy, but I think I would rather wait and see if 63 is good follow through. This is one of those trades that, is hard to sit out of. I think, at least. You can stare at 62 and you can see why it's a reasonable swing trade. But what are you trying to accomplish if you're buying above 62? You think we're going to get a relatively strong rally. So I think it makes a lot more sense to just wait and see if you get one more really good bull bar, or trade the failure, something along those lines. You're buying in the middle of a trading range, so it's really hard to do. And you get kind of bad follow through 63, 64. You get two bull bars, 63, 64, but they're doji bars. They're really not what you want to see. And then outside down 65, and then a huge bear bar closing near its low 66. I thought 66 is a reasonable bar to sell below, betting on a downside breakout. Again, I was not all that bearish on the day, so I was a bit hesitant, but it's still a surprise bear bar closing near its low. It's going to be an okay swing sell. 67, big tail on the top, did trigger the sell below 66, and then disappointment 68. So outside up 68, a reasonable swing buy. We have a failed breakout below the triangle. Just draw it in. And we might try to get the breakout above, and if bulls are lucky, maybe we'll get all the way back up here. So reasonable swing buy above 68, or wait for the follow through 69, good follow through, 70, 71, good follow through, but towards the top of the range. And disappointment 72, I think bulls just exit, but strong enough for a second leg. I wouldn't scale in this late in the day. And we can see we kept the gap open with the 68 high, which is a swing point, so good for the bulls. But I thought in general, probably just better to get out below 72 and be done for the day. But if you were bold and you scaled in, you can see that 75, even if you bought this close scaled in, you got out. Why? Because it's trading range day, and trading range days let traders out. So that, the fact that trading range days hit those magnets and let traders out here, here is one of the reasons I thought we might get up here. Swing, always in trades on the day. I thought it was probably always in long on like 5, but pretty hard to buy any of this. This looks climactic. Always in bulls, exit 15, good sell. You can sell 15, 17, probably 19. I'll probably get out here. You can maybe sell again 26, but you get out probably above 30, I would say. You can buy 35. If you get out 39, you can buy again 40, 41. You're probably out. And then buy again 45, 46. Get out 48 at the latest. Get out during 48 if you're good, or if you can. Double bottom 52. You can probably buy above 52, but I think hard to do with how strong this was, but probably okay for a trade up to here. If you're taking this trade, you probably got to find a way to get out up here. I wouldn't just hold this as always in. So I would probably be out below like 57 at the latest. And then maybe you can sell 66. You get trapped. You reverse above 68. You can buy above 69 as well. But not the best day for always in trading. Okay in the beginning of the day, but a bit of a difficult day for sure. On the daily chart, I think we're forming, maybe some sort of wedge like here. I don't think it's all that great for, either side. I think, if we go a little bit lower, we're probably not going that much lower. You can see we had a small bear close today. So good for the bears, but really just a doji bar. I think we're forming a trading range here. Probably going to find buyers relatively soon. The weekly chart, bears hoping to get another bear close on the weekly chart. And bulls hoping to buy this up as much as possible. But what if we do get the bear close? What if it closes right here? Well, what's the same thing we've been saying? What about this? It goes down, it goes up. You can see it went down and up on that bar, and then a second leg down here on this week's bar. So potentially a two-legged correction here. Not as good as it could be, I think, for the bears. So really just expecting a minor reversal. Expecting sideways, sideways to down overall over the next couple weeks, but probably just more sideways. And I think over the next couple days, a bit of a bounce.